Okay, hi. I'm Eva Bionzolillo from Homeowners Resource Group. And here I have with me today my own personal life insurance broker, Joe McMahon with 1847 Financial. He was introduced to me through my accountant, Gregory Scotto from Scotto Melchior Group in Islandia now. Sorry, they changed places a couple times. So for the past couple of years, Joe has helped me in my own personal life as my businesses have grown, as my family has grown, my own personal needs have grown to help me out with setting my family up for instances of hopefully never needing life insurance. But, as we were saying before, everybody dies at some point. So we want to make sure we're prepared for that day when it comes and that there's no surprises and that the family is covered and taken care of. So welcome, Joe.
Well,
Nice to
thank you
see
for
you.
having me. This is great.
Yeah. Nice to see you in person. This is now my second time seeing
Second
you,
time after all these years now.
right?
Yeah.
And the first time was at your golf outing. So if you want to talk a little bit about your foundation and your son and why you created that.
Sure. So a little background on me. Before I got into the life insurance business, I was with the New York Islanders in the NHL as the head equipment manager. So I was with them and going along. And then unfortunately, I had a tragedy in my life that my middle son passed away. So at that point, I decided it was time for a career change. So I left the Islanders and then joined the insurance business. And so my whole life, now at 57, I've only had two jobs my whole life. I'm not a creature of change. So after he passed and we got through all the hard time, we decided to start a foundation in his memory and my mom as well. So we have the Lean Aid McMahon Foundation, where we raise money for hospice here on Long Island and for the American Liver Foundation for research specific to the disease that my son had. And so far, we're just a hair under $2 million since we started. So very proud of what we've accomplished.
Yep. And you always put together a great golf outing. So
It's crazy. It's 250 golfers. I had this year like 30 Islander alumni that came in town that were signing autographs, and everybody was just eating, drinking, and buying jerseys and bats and pucks and stuff.
Yep.
And it was just a really wonderful event.
Yep.
It's grown beyond my wildest dreams.
yeah. And my husband and our friends and I are going to be doing that game that we got in the box for
Oh,
the.
you got the owner's box.
Yes. The owner's box. There you go.
Yeah, John Ledecky.
No big deal.
That's with food and booze, so come hungry.
I'm ready.
And he'll be a great host. That's a great spot to watch a game at UBS. Great
Yeah,
spot. John
can't wait.
John Ledecky's awesome. He'll make it special.
Perfect. Well, thank you.
Thank you.
Thank you for coming here today. And I hope we can have some good, useful information for people.
Absolutely.
All right. So what led you, like what you just said, to become a life insurance broker? And then since you've started, how has this industry changed?
Oh, it's changed dramatically. When I was with the Islanders, there was always a guy that hung around by the locker room that I guess was the insurance broker for the players. And he always said to me, Joey, if you ever think you're going to leave, you would be great in my business, So that's kind of like where it stemmed from. And then after my son passed, I was thinking about what would I do, because I knew staying in the NHL wasn't for me any longer. I had outgrown that. I needed to be home with my wife and my son going through what we were going through. So I said, you know what, let's give it a shot. So when I entered it, it seemed very simple at the time for me because I had so many connections of people. And I know that it was a need that people need, right?
Mm-hmm.
People need to have life insurance. So I'm a person who likes to help people. That's first and foremost for me. So I said, wow, this is a way for me now to help people. And so I went in and got my licenses. And, through my network of people that I met through the NHL, I really didn't start off slow. I really hit the ground running. And it's been great. I've built myself a nice business. And more importantly, I've helped so many families. But from when I started till today with regulations, state by state regulations on who can get it and how they can get it, it has changed dramatically. So much so that nowadays I even say to people, if we're in New York, I'll say, do you have any property anywhere else? Because it might be easier to write it outside of New York. Just because of all the strict rules and regulations that advisors, and then I have to go to the client and put them through the ringer to get even something as a basic term policy.
Right.
So it has changed in that way, and in my opinion, not for the best.
So that was my next question. Not only New York, but you cover other states?
Oh, I'm licensed everywhere. I have clients in California. Again, being with the Islanders all those years, a lot of my former players that have now retired are clients that I've done all of their planning. So I'm licensed in, I would say, close to 20 states around the country. So it depends. And if it's a client that's not in one of the ones, I could I can get appointed and licensed in a day.
And the companies that you broker through are?
Well, I mean, right now, I try to give most of my business still Penn Mutual or Penn Insurance and Annuity, as
Yep.
now it's called, because of the regulations they had to branch off. But I'm licensed with almost every single carrier in New York. And I think that's an advantage when you want to consider life insurance, because every company isn't cookie cutter for every family.
Right.
So I'm very aware of what the pricing is in the market. I'm aware of what fits your budget, what's got better dividend history, like all of those things that I have to consider before I actually say to a client, listen, I think you guys should consider this. So I'm licensed with everybody. I am not a broker that can only just recommend. Like, there are some advisors that are only allowed, say like New York Life. You can only sell New York Life. That's it.
Mm-hmm.
They'll tell you that that's the best,
Right.
but it might be more expensive than John Hancock or MetLife or
Yep.
something like that. So, that's why I think there's an advantage to work with somebody who's licensed with everybody, that's going to do all the work to make sure that you're getting the best deal.
Yeah, that's like why I have, I think, 4 different policies with 4
Right.
different
We did.
companies.
Right. We
Yeah.
did Mass Mutual. We did Penn Mutual. Yeah. I
All of
mean,
'em, yeah.
because it was better deals along the way. And that's
Right.
my job as an advisor. I always say my job as an advisor is to get you the most insurance for the least amount of money, especially if
Mhm.
you're talking term insurance
Right.
with a reputable company.
So let's go there. What is life insurance? Break it down, because
Right.
everyone's like, I don't know. It's something, you get,
Right.
when you die, and people don't really exactly understand. So if you could explain it in a simple way.
Sure. So there's basically 2 types of life insurance. You have term insurance,
Mhm.
which is basically you're renting a policy for a period of time.
Mhm.
And then you have permanent insurance, which is a policy that would last for you forever.
Mhm.
So term insurance is basically exactly what it is. You pick a period of time that you want to have coverage for, 10 all the way up through 30 years. They go in 5 or 10-year increments.
Mhm.
And you purchase that for a premium. It's guaranteed to be that premium over time. And simply, unless it's a convertible policy, which some of the term insurances are, you could just simply ride it out. And at the end of that term, on that anniversary of that policy date, it would simply just go away.
Yep.
So it's a great way for young families with young kids that are starting out, first baby, bought their first house, and they're still in that building phase, that they don't have any other monies to pay for more expensive permanent insurance. It's a great vehicle for them to say, wow, you know what? I bought myself a policy. God forbid something happens. Well, I have a baby and my wife's pregnant with our second. God forbid I don't wake up, she's getting something.
Mm-hmm.
So it's a great vehicle, and then permanent insurance, there's 3 different types of permanent insurance. The most expensive is called whole life, which is like the Mercedes-Benz, which is a cash builder. It has numerous beautiful things that can affect people's retirement planning and things like that, guaranteed forever. There's also something called universal life, which is basically the most boring form. It's basically a permanent term to get you to the end of your life,
Mm-hmm.
kind of like the planning that I did for myself, and I know we did that for you and Anthony. And also then there's another plan called variable universal life, which I'm not really a fan of because I'm not a risky person, but that policy is linked to the stock market. So you select funds, and if it does well, your policy does well. If your portfolio goes boop, it goes down with it.
Right.
So it's not a guaranteed thing. And, but for younger people, some people like that risk of going up and down, and they're okay with, getting a 0 1 year or a -5 in their life insurance. I just view life insurance as something that, unless you're doing it for retirement planning, you're not doing it for yourself.
Mm-hmm.
You're doing it for your loved one. You're doing it for your husband or your wife and for your children or your
Correct.
grandchildren one day. So why would you put that at risk? And that's just my conservative opinion
Right.
on that.
It's a way to build an inheritance if you don't have cash in the bank, kind of thing.
Absolutely, for that type of a thing, if looking at it from death benefit. But just to circle back to the whole life, really since COVID now, whole life policies have become front and center on what
Right.
people are using to supplement their retirement planning, because
Right.
whole life insurance has the cash accumulation buildup that can come to you at a point in the future that you decide. And that's the other beautiful thing about it is that a whole life policy, if you use it for that purpose of building up cash because you're creating your own retirement, you don't have a 401k or 403b. You might have a Roth, which is great, or you might have, any other brokerage accounts. This is a way for you to have a bucket of money out there that you can use tax-free. All the other vehicles, aside from the Roth, are taxable.
Right.
So I always say to people, this is just a piece of your overall plan that you can say, wow, you know what? In a down market at retirement, why would you pull from your brokerage account? You would run out of money even quicker.
Yep.
So people will give that a rest and pull from the whole life.
Mm-hmm.
And then vice versa. There's not a required minimum distribution rule with it. You could fund it as long as you want. take it when you want. It's just a great, great vehicle. Plus, it gives you a death benefit forever. And another thing with these permanent policies that has now become front and center, and it's been another hot topic in the life insurance business, is long-term care.
Yes.
And long-term care is another potential black hole for any family, whether you need
Yeah.
home, assisted living, or nursing home. And a lot of these current permanent life insurance policies have that on there as a free rider.
Mm-hmm.
So it's actually very interesting. I know I have it.
I have it.
You have it. And, and it is something that if, God forbid, you went out and you didn't do any estate planning, and there's a 5-year look back period on our assets going out, right? So if you own those assets, you're not getting anything.
Right.
You can't apply for anything until you're impoverished, basically.
Yes.
So this would give you access to your death benefit while you're alive to help offset the cost of your care and hopefully get those assets out of your name.
Yep.
So these permanent insurance, in my opinion, is an asset class.
Mm-hmm.
Term insurance is, again, you're renting it.
Right.
The whole life or the universal life that I mentioned is when you die assets.
Right. And I think how you explained it to me is like one is for when you die, and then one is for if you die in
Correct.
this period.
Right. And I mean, to use your family as an example, I mean, you still have young ones. So, the term insurance is a huge part of your plan. It's
Mhm.
inexpensive. And
Mhm.
if, God forbid, something happens, Anthony's not going to have to worry
Mhm.
about who's going to run to dance and soccer and food shop and do the bills and all these things. You have liquidity to
Yep.
hire somebody, and again, your need is going to be higher now because those needs are high, especially mortgages and things like that. And eventually your need will plateau and then start to go down. And that's why the term insurance, then it's okay that it goes
Drops
away.
off. Yep.
But as long as you have the other horse in the race,
Correct.
the permanency.
Mhm.
Right.
Yep.
Because I could say one thing, Eva, it's guaranteed we're all going to pass at some point.
Yep.
Nobody's
Just a
getting
matter
out
of
here in
when
our life.
and
Exactly.
how.
Right. Exactly.
So now, just you already said the difference between term and whole life insurance, but are there any misconceptions about life insurance that you hear from people?
Yeah, I think people, depending on experiences that they might have had in the past, working with certain advisors that they didn't feel it was trustworthy or whatnot, or they actually recommended something that was more beneficial to the advisor
Right.
than it was to the family. I certainly have never run my business that way.
Mhm.
I don't even look at it from a money standpoint. For me, I truly love to help people.
Mhm.
So I think that's why my business is going so well. But I think that, misconceptions of life insurance is, oh, I'm going to leave it alone. I get it through work, or, or my husband's a Suffolk County cop and,
Yeah.
he gets 2.5 times his salary. Meanwhile, if you read the fine print, they don't get the full
No.
because they haven't contributed all the premium funds. I mean, that's how life insurance works. If you pay all the premium, you get all the benefit. If you don't get all that money.
Right.
So there are a lot of misconceptions. I don't need it. I'm too young.
Mhm.
I have assets. I have properties. I have all these other things. Why do I need life insurance for? And, the reality again is that, just to use the long-term care, for example, if at some point you had a stroke or you became disabled, you're liquidating all that stuff. And then what
Mhm.
happens if you liquidate and die and don't have
That's
life
it.
insurance? You've really, really left your family at a disadvantage.
Mhm.
So, and as far as, permanent insurance, the biggest thing that I hear is, I could do better in the stock market. Okay. And
It's a full-time job
Yeah,
to sit
it
there
is.
and watch
to
everything.
sit there and watch. But I could tell you one thing: if you look during COVID, what was the only thing that kept performing consistently during COVID when the market was going up and down? Even go back during '08 and '09 when the market was going crazy, was whole life policies. That is why there was such a pop in it.
Mm.
All my accountants to get an endorsement from an accountant in my business is a big deal. And when you have an accountant say, talk to your insurance person about a whole life policy.
Which is what it was in my situation.
Exactly right. Now, at least you have a constant,
Yeah.
right? You have a dividend and you have a guaranteed interest rate in the
Mhm.
policy. And at some point in the future, you're going to have that sitting there.
Yeah.
Whereas if you put your money in, even our 401ks, how many times you get the envelope and I don't want to look at it?
Yeah.
The whole
I
life-
don't have one.
Oh,
I have a self-directed IRA.
Right,
That's a whole
so-
separate topic, but
Right,
yeah.
right. But I'm just saying, though, people who,
Yeah.
oh, I'm not going to open up the envelope because they're
Exactly.
afraid to see the loss.
Exactly.
The whole life is the constant. And I have to tell you, I've done policies for some very successful people. If I could share a story, like
Yes,
I
please.
have one client that is worth close to $500 million.
Mhm.
And I met him through the hockey world, and he needed life insurance for an estate planning situation. And when we were going through it, now you might look at him and say, his wife doesn't need life insurance. He's worth $500 million.
But what are their bills?
But, well, their bills, they got the Southampton house, they got the compound and wherever else, and they're loaded, right? So, but from an estate planning standpoint, he said, I'm working so hard. I want life insurance to make sure that my wealth is preserved upon my death. So his accounting team reached out to me and said, listen, we have to do whole life policies for them inside of some trust work, which I did with their lawyer. And we did 2 very big whole life policies that wound up going inside an irrevocable life insurance trust, an ILIT, so that they can use that and get that growth, that guaranteed growth, to make sure that at the end of the funding period that they were going to have enough money to pay the estate taxes and preserve his estate.
Right.
So, again, slow and steady, and those dividends as the policies go on get bigger and bigger. And that's why I will argue all day long about, having all your money in just the market and not considering this as a piece. I'm not, again, I'm not saying give it all.
No.
A piece.
Yeah. It's diversification.
Exactly
allocation.
Right. Diversify and give yourself. And then listen, if God forbid you never reach the distribution point of the cash value to supplement your retirement, your family has a death benefit that's been growing and compounding since the day you paid.
Right.
Tax-free.
Are the policies transferable to your family members upon death? So say like I didn't get to the end of one of them, is there a way I could transfer it to, like, if mine are in my trust? So what happens now once I pass? Does it go to the trust and then my trust goes to my kids, or does it carry over
Right. So if you passed and you name your trust
as a
as
beneficiary?
the beneficiary, your trustee will then have to execute your wishes inside of the trust
Right.
about the distributions of the death benefit,
Mhm.
right?
And they can't take the policy over themselves though, right?
Because it's life insurance. So when you pass,
That's it.
That's
It's
the
tied to
trigger.
just me.
Right. So God forbid you pass, that death benefit is going to go inside the trust, and then your trustee will execute your wishes to make sure that it goes to however your trust is laid out.
Right. So now how much coverage does the average person need? Say,
Right. I
Yeah.
mean, listen, we live in New York,
Yeah.
and even if now people say I'm going to go to Florida, Florida is just as expensive. So
Yeah.
what I like to do for folks, if they're open to it, it's funny because when I first started in this business, I said, well, how do I know how much Eva would need? I don't know, and then I would sit there and I would do something called a survivor needs analysis for people, where I would say, all right, well, give me what your incomes are, your bills, your mortgage and things like that, student loans, your car loans, whatever else you have. And then do you want education to be part of it? You have
Right.
3 young kids. Well, I could tell you, I'm almost done now paying Penn State, and it's not cheap, right? It's over $70,000 a year that we're paying out of pocket. So if you add up just the education need,
Right.
assuming you want your kids to have death benefit to go to college.
Right.
I'm not saying funding the college. I'm just saying if mom or dad died, is there going to be enough tax-free death benefit to come in to pay? So at that point, if you add up that and your salary and your wages and all those things, there's a need.
Right.
Right? You need what they say the average, 7 to 10 years of salary,
Right.
So, and I did that for years for people. I would do the survivor needs analysis. And then it was weird. As time went on, I found more people not wanting that report from me. They were more focused on, well, what's it going to cost?
Right.
So then I would say, all right, well, if you don't want me to, Joe, I don't want you to do all that work, even though I'm so anal to do the work because
Yeah.
I want to try to get close,
Yeah.
but you're never going to get dollar for dollar. But people would say, Joe, listen, I could only afford X amount per month. How would you divvy it up?
And then you back it out from
And
there.
then I back it out from there. So, that's how I typically.
Ideally, it would be, this amount, but
Right.
if you can afford this, then this is what you can get.
Right, because it could be sticker shock. Like, again, if you have 3 kids that you want to say, all right, I want to go to Hofstra. All right, that's 70 times 4 years times 3 kids.
Yep.
If you're using there's $1 million.
Mm-hmm.
All right, that's $1 million.
And that's only to go to school for.
And that's only to go to school. Again, so I'm not telling you how to get the $1 million.
Yeah.
I'm saying if you pass, well, now $1 million of your life insurance is going to be allocated towards college. Okay, what about income replacement? What about your bills,
All
your
that.
mortgage? That's why it was another reason why people are like, whoa, I need $4.7 million of life insurance. Well, listen, if you want to check all the boxes.
Ideally, yeah.
But again, now you circle back to then what I would recommend for products. Okay, listen, you have 18 years left on your mortgage is this. Your youngest is now 7. 8.
Mm-hmm.
Okay, well, you
Mm-hmm.
don't need to carry a 30-year term.
Right.
You're wasting money at that point. So that's why I'm able to zero in
Right.
with the length of term insurance, make that higher death benefit term because that's a temporary if need, right? Eventually you'll pay all that off, it'll go away. And you could just simply either convert that or let it go,
Mm-hmm.
and then have that to take you out to the day you die, your permanent policies.
When do you have to decide when you want to convert the term?
So it depends on the company, and it also depends on your age. So like most companies will nowadays will give you the full 20,
Mm-hmm.
depending on your age. So like for example, if you were 60 and you bought a 20-year term policy, you wouldn't get till 80 to convert it. I think you get to 65 or 70. Every company is a little bit different.
Right.
But if you bought it when you were your age, you have the full 20.
Right.
You want to wait till the day before, convert it. And the beauty of it is that there's no evidence of medical
Right.
needed.
Yep.
So if your health goes sideways, or if you started being a chain smoker or anything like that, they would never know.
Right.
You got preferred plus, you got standard, you whatever. That's what you
Mm.
get converted at. No questions asked.
And what happens when you convert it?
So what happens is then it's available, any product in the portfolio of the insurance company when you go to convert.
Mhm.
So if you decided you wanted to get more of the permanent term one, for example, you know what, Joe, I have $1 million, I want 2. I want to convert $1 million of mine. We would just go to the insurance company and said, listen, we want to convert. And talk about conversion real quick. I don't know if I really touched on it, but convertible life insurance, in my opinion, unless you're doing something for a buy-sell agreement for 2 business partners, where I would do non-convertible because it's a little bit cheaper. But for families that buy individually owned life insurance term, convertible is great because in the future, if you did decide at some point you want to convert and you're worried about your health, you can do that. So basically, say at $1 million policy, depending on what the company is in their minimums, you could convert, say, as low as 100,000 up to the million
Mm-hmm.
to a permanent policy, be it a whole life or universal, with no medical questions asked.
Right.
So when you do it, obviously, the younger you do it, the cheaper.
Mm-hmm.
You know, the longer you wait, the more expensive it, because in life insurance, most companies, every 6 months when you're closest to your next birthday, those internal costs go up.
Right.
So you don't feel it. You're like, for example, like your term and my term, like it's $100, for example. You don't know, but it's $100 the entire 20 years. But internally, out of that 100, certain little bits is going higher for the cost of insurance and the mortality expenses that are
Right.
built into any life insurance
Mhm.
policy. So at that point, when people ask me, well, when should you convert or buy permanent insurance? My advice always is, listen, if you can afford it and it makes sense today, do it earlier because it's just going to be cheaper.
Mm-hmm.
And then you can get it over with quicker.
Yeah. And plus, as the value of the dollar goes down, $400 of insurance today, and if you're paying that same amount every month for however many months, it's actually going to get you more in the future, right?
Well-
If you think about it, so it's like if I'm paying
Oh, I see.
$400 a month
Right.
today, it's like what I'm getting at the end. It's like you're
Right.
almost getting more out of it at the end.
But again, you're technically not getting it because you're gone.
Right.
So it's for your family. I hate to
You know what
say
I
that. Right.
They.
But again, and it's also tax-free.
Right.
That's the other big thing about life insurance, the tax-free advantages of the death benefit and the tax-free advantage
Right.
of cash distributions out to supplement retirement.
Exactly. Yeah.
It's a huge benefit. And that's why
The biggest part of it is that it's tax-free.
is that it's tax-free.
Mhm.
You know, I mean, listen, it's tax-free today. Who knows what can happen in the future with government
Yeah.
and rules and regulations. But if you're a business owner and you could take money from your business and say, listen, I'm doing my own retirement plan. I'm going to fund this, my exit strategy is 20 years. And you could have the business fund something for you in your 21 or 25, whenever you decide. Start pulling out all that money tax-free. So everything above your cost basis, which is the money you put in,
Mhm.
is tax-free.
Yep.
How nice is that?
Yep.
It's win-win.
Yep. So do you have an example of how having life insurance has protected a family during a difficult time?
I do. So one of my clients, a business owner, he has a beautiful company right here in Bohemia, and makes a couple $1 million a year, stay-at-home wife, the 2 kids that both play travel hockey, the whole 9 yards. And I finished the plan. I did buy-sell planning and all those things. And then at the very end, I said to him, have you thought about anything on your wife? And he said, why? If she goes, I'm more than okay. And I said, you should really think about that because, what
Who's going to fill her shoes?
who's gonna drive, and does she do the bills? Yes. Does she do the food shopping? Yes. Does she drive to practice? Yes, because I'm working.
Mm-hmm.
I said, this might make sense. So I did a policy. She was 38 years old. and I can't help it. I get close to the people I work with. So I met her and I thought she was wonderful. Like, what a lady. And she was a spin instructor.
Right.
I mean, she would have wiped the street with me, this girl, like
Mhm.
just shredded. And I said, this is going to be easy. So I did a $500,000 20-year term. And I think her premium was like $335 a year. She did the medical preferred plus, the squeakiest clean we got. Within 2 years, Kevin called me one day and he said, Joe, something's going on. I don't know. It doesn't look good and whatnot. So fast forward, within 12 months of that phone call, she passed. She wound up getting brain cancer
Wow.
and she passed. So the policy was in force. I think it was like 3.5 years, whatever it was. And that was my first death claim that I had to deliver. And back then, they actually gave out checks back then.
Right.
Nowadays, it's just direct deposit and whatnot. But I got the check and I brought it to him. And I was overcome with emotion
Yeah.
because it was in a time of when somebody's at their lowest. He just lost his wife. The boys just lost their mom
Yeah.
so quickly. Everybody else around them still wanted to get paid. Verizon needed to get paid, the mortgage, the taxes. I was the only person going there with something.
Right.
And it was so empowering to me. And I gave him that check for $500,000 and we were both crying and I hugged him. And after the dust settled, he called me and he said, Joey, I cannot thank you enough. That small little conversation
Yeah.
that we had, should I or shouldn't I? He was able to hire somebody. They were able to split the driving, the girl
Wow.
did the cooking and the
Yeah.
cleaning, and
Yep.
he was able to go back to his business
Continue. Yeah.
and try to keep things as normal as he could for the boys, right?
Right.
Which was his goal, not have them miss practice because I can't be in two places at once.
Hmm.
But this costs money,
Yep.
that for me was one of the most rewarding moments in my career of the 22 years now that I've been doing life insurance, that
Oh,
I know I made a difference. And I know I've made a difference with everybody else I've done planning for. And thank God I haven't done many death claims. I've had 3 so far.
wow. That's not bad.
No, it's not bad. So yeah, I
You
know.
work with some healthy people.
I work with some healthy people, but but again, it's rewarding knowing. And when I look at all of the clients I have, I'm like, I'm proud of what I've done
Yeah.
because I know I've truly helped people.
Hmm. And, as we age, things will start to go. And obviously, with all the sicknesses that are out there these days and everything,
Absolutely.
would anything like that deter somebody from their ability to get life insurance if they have like some sort of illness they were born with or?
Yeah, certain companies, it's funny that you asked that, Eva, because there are so many companies that look at things differently.
Yeah.
Like some companies look at, say, colitis as this is
Yeah, that's a big one now.
that's a
Crohn's.
big one. Crohn's, colitis,
A lot of people have
obviously
it.
diabetes now across the board is a
Yep.
bad one. I find that nowadays insurance companies are more strict with the height weight thing. That seems to be like something that I always say to people, listen, if things turn
Yep.
for you and you get in, what they consider.
You did mine when I was in between babies and
Yes.
my, was not in a good place. So I'm ready to retest soon. I've been going to the gym 6 days a week. So
and I want to help you
Yeah.
get there because I said,
Yeah.
like I said to you then, I don't want you to give your money to the insurance company.
Right.
Keep it in your own house, right?
Right.
It's the most important thing. So there are certain things like, again, heart disease and carotid artery. There are some things that
Yeah.
could push you. So now when you think about life insurance, there are different ratings. And the way that works is that the highest, squeakiest clean you could get is called preferred plus or
Yep.
ultra preferred. Then there's preferred. And then the majority of the population gets standard. It's
Right.
like 82%, I believe, is the number. Gets standard. You're just like
Mhm.
everybody else. And then you have preferred if you're a smoker. Now, tobacco is a big thing. And that includes the dip pouches, if you're doing a pinch, or
The
you're doing the
vapes.
vapes, or you're doing those other things.
Anything. Yeah.
If they get that in your system, you are a
Right.
nicotine user.
Yep.
That's like 40% higher in premium.
Mm-hmm.
So that's one thing to take
Yep.
into account. Then you have standard tobacco, and then if you have like really some big stuff going on where you have, say, a trifecta of diabetes, heart disease, or something else, your height weight is not good, then you could be something called substandard, which is basically a table rating, and the tables go from like 2 to 10 or 2 to 12 depending on the companies, which means you're
Yeah.
not
It's a higher
on-
risk for
it's a
them.
way higher risk that the
Mhm.
odds of you passing are a lot higher.
Right.
So when you talk about, getting life insurance, when? Well, do it while you're healthy.
Yep.
So you don't have to think about these things that could potentially arise.
We kind of spoke about this, but how does it tie into like estate planning and wealth transfer? If you could, just bring it about like tax advantages, using it as an investment vehicle, anything for business owners that stand out?
Yeah, so I mean, we did touch a little bit about it, but from an estate planning standpoint,
Mhm.
everybody was waiting for the sunset provision, which happened in 2025, where there was so many different things that was happening with the election that we were unsure of how was this going to shake out, because the exemption was 5.5 million, per person, and then it was talk about it going down if Democrat
Right.
got in, and but then Trump got in now, so now the exemption is still pretty high.
Mhm.
So that was, and it still is a big thing in the future because you don't know what those exemptions are going to be. And if you happen to live in a decoupled state where you have federal and state estate taxes,
Yep.
you're talking your estate, if you're over the threshold, could be taxed at 54, 56, 58%
Mhm.
upon death.
Yeah.
So how do people mitigate that? They typically will buy policies called second to die, which is one life insurance policy on two people. And basically, the first death happens, nothing happens. And upon the second death inside of a trust, that will then go to the trust to settle the estate.
Oh, okay.
So it's one policy for two people. It's
Right.
called survivorship life insurance. So that is a very, very popular standard technique for wealthy people that are above the threshold. And who knows where it's going to be, right? What if it goes
I
down to
know.
$2 million one day?
Yep.
A million, 3
A
million.
million isn't what it used to be.
No, and that's just it now. So, like, if the next wave of presidency comes along and it's
Yeah.
somebody who doesn't believe in a high amount, like the current regime, it's good for my business because people are gonna say, oh my goodness, I need to make sure that I have life insurance to cover my estate. So that is a very common thing, is a second to die policy
Mhm.
for estate planning. And
What if somebody gets it in New York and then moves to like Florida,
yeah,
where
that's all portable.
where things are different?
Or
Does it
Europe.
change anything?
No, it's
No.
portable. Life insurance is portable. That's why
Okay.
people ask me, what if I go to London and decide to stay? Well,
Yeah,
it's just,
it carries with you. But you were saying before how like New York looks at your policies different than like if you had a property in Florida, apply under the Florida one
Yes.
instead.
It's just easier, just
Yeah.
for underwriting and thresholds. I think, like Penn Mutual, for example, now just came out with, we can get you underwritten for up to 10 million
Mm-hmm.
with no medical.
Wow.
It's remarkable.
Wow. Yeah.
If I write somebody the lowest, which is 100,000 in New York, I got to get doctor records, and
Yep.
it's insane the
Mhm.
amount of legwork to get somebody to do a small 250 term policy.
Yeah.
But it is portable. Like if you do your estate planning in New York and then you move to Florida to retire, it's still a legal binding document.
Right. Can you reapply under the Florida terms, or
Well,
you would?
At that point, it's already done.
Yeah.
It would be no reason,
Yeah,
unless
you'd
you
have
wanted to add
something
to it.
else.
Like
Mhm.
if your estate has grown even further and then
Mhm.
your team of people
Right.
say, geez, you got to get a little bit more if you want to preserve. But again, you're never going to get dollar for dollar. There's going to always be something due.
Right.
Right. But at least this way, if you want to preserve millions of dollars, which some of my clients have that they're looking to protect, a $25 million second to die policy is not an uncommon thing nowadays.
Do most of your clients have trusts?
No,
No.
most of my clients don't. I mean, I would say maybe under 10% have trusts.
Really?
You do. I know you
Yeah.
have trust. But no, a lot of people, they don't. I mean, my wealthier clients all have trusts. They're owned by the irrevocable life insurance trusts and all that. Yes. But the majority of the people, no, it's just I die.
Why do you think that is?
Maybe their lack of
Knowledge?
and their lack of
Because I had a whole other interview another time about the difference between a trust and a will and how you can completely avoid probate if you do a trust.
Correct.
It goes into your account the next day. There's no
Right.
waiting for surrogates court, no paying probate fees.
That's right.
It might cost you a little bit more now, but it's going to save you a lot of headache and
Yeah.
money later.
I agree. And I think that that's something that a lot of people, again, a lot of the planning for the people I do, they'll say, well, listen, I need that liquidity upon death, God forbid,
Yeah.
something right away.
Yeah.
So nowadays, as soon as you get the death certificate, you get that direct deposit into your account right away.
Yeah.
And a lot of people's estates aren't at that levels, some of them.
Right.
I mean, you are definitely ahead of the curve because you're smart,
I've
and
just
you're
seen,
organized.
Yeah, I've just seen so
Yeah.
much happen
Yes.
in what I deal with people in foreclosure and all these things
That's
that
right.
like, obviously they couldn't afford their mortgage. They couldn't afford a life insurance policy. So they literally left their families with nothing.
Exactly.
Until I come in and say, hey, here's a couple bucks from the bank or whatever, then that's kind of
Right.
all that they're left with. And it's like sad to see that,
It is. And again, like the people who decide to do it at an early age, again, like say somebody in their 30s and 40s, again, they're not thinking, they haven't had
No.
that chance to have that growth
Yeah.
where they're looking at an estate problem unless they somehow get a big inheritance from their
Yeah.
family, and then they're stuck with estate planning that they need to do.
So do you feel that having life insurance or some sort of policy that every single person should have it, just like health insurance?
Yeah, again, depending on what your needs are. I mean,
Yeah.
right?
Right. Doesn't have to be a,
Right. It doesn't
grandiose
have to
thing.
be the big whole life where you're putting $1,000 a month away,
Right.
For something. When you talk about life insurance, you have to check all three boxes. Is there a need? Are you insurable? And can you afford it?
Right.
If you don't have all three of those, then there's nothing to talk about. But again, at some point we're all
Yeah.
gonna go at some point, and I believe that, as the researchers show, most people buy life insurance 3 times in their life.
Hmm.
Right? You might get the first little term one when you first get married and you get the mortgage and you're pregnant with the first, and then you'll ride that out a little while. And now we got 3 kids, and now we're upgrading our house to a bigger house, which means a bigger mortgage. And then, and now we see we want to do private school, and we want to do this and we want to do that. Well, now their need keeps getting higher. So then people will go again and they'll buy another one,
Hmm.
or they'll convert and add some more term and whatnot. So again, and then you get you through work. And then now that next stage where if you did that route where you only believed in having employer-owned life insurance, and then you leave, well, I'm not going to take it with me,
Right.
because that's community rates.
Right.
So if you go ahead and you're paying X amount and you decide to leave your job, and then you say, oh, I'm going to keep this policy, and you get the sticker shock of, oh my goodness, well, because you have community rates. Meanwhile,
Right.
you could be healthy as a horse. So
Right.
that's usually the third time when people say, well, I better get another policy,
Right.
and not continue through work.
Right. And then once they leave that job, that policy is gone,
Just
right?
goes away, yeah.
So they paid into it forever and they don't get anything
They don't
out of
get
it.
anything, because most of that is like group term insurance. And again,
Yeah.
you're paying community rates even for that.
Yeah.
Like you're paying for the guy who stopped at a Dunkin' every day getting a dozen donuts.
Hmm.
Meanwhile, you're running 3 miles before work, he's eating 3 donuts, but you're paying in the middle for him.
Right.
That's why if you do the math on some of these, when people ask me, Joe, I'm thinking about retiring, I'm paying this through work. I say, well, we could easily beat that.
Yeah.
Do your own. Why
Yeah.
do you need to be tied to that guy?
Yeah.
Do your own planning.
And they don't even have to really do it through work. They probably just opted in.
Yeah, you opt in on $9 a month or whatever. But again, it's when you decide to go.
Right.
That's when you go, oh, it went from $9 to 98.
Right.
Wow.
Right.
So now you do your own.
So you feel like there's always some policy out there that's affordable for everybody, no matter what the situation
Absolutely.
is.
And again, the younger and the healthier you are, the cheaper it is. I mean, I wrote a policy for somebody who's 28 not that long ago. I think it was $280 a year. It was like 200 and something dollars a year. I say people spend more than that at Starbucks in a
Yeah.
month.
Yeah.
But again, it's part of growing up. It's part of maturing. You know what? If you're growing up and mature enough to get married and then start a family and all these things, this is all part of it.
Yes.
You have to,
Definitely.
if you love your spouse and your children, you don't want to leave them stuck with a mortgage. This is just a normal progression of life.
Yep.
You get, and again, depending on what it is, do a 10-year term to get started.
Right.
10-year term insurance is probably, you can get it for an insignificant amount of money.
Mm-hmm. And then what about people that are older looking into this?
Yeah, so people that are older, again, the biggest thing again is the health. And if you're not falling into a good health category,
Right.
it is expensive. And there are some times where people are stuck.
Yeah.
And I just actually delivered a policy just last week for a person in the Bronx who the wife, we went through it and he was barely insurable. I mean, I had to actually call in a favor to get it for him, and I got it for him. And I said, he's probably not even going to take it because it was expensive. And we spoke, and he said, I have to speak to my wife, and he's 65 now. And it was only for $100,000 too. And when the wife got on the phone, she said to him, no matter what, we are taking this policy because I am not going to be stuck here without anything.
Right. Because that would have been their only inheritance.
That would have been it. Well, for her, because she
Right.
didn't have
There's nothing in the bank really.
very little
Yeah.
in the bank.
That's another way I look at it, is like you're buying inheritance.
You're buying
in a way.
inheritance.
Yeah.
And another quick thing, Eva, too, is that he happened to be a city of New York worker.
Mm-hmm.
So when he retires, his pension is going to die with him.
Oh, man.
So now you think
Yeah.
about it. If you're saying, if you don't choose the pop-up option that you're going to continue to your spouse and you die and your pension dies, all you're going to get then is the higher to the Social Security, right? So
Yep.
at that point, what is your spouse going to do for money? That is why permanent life insurance is another major thing for people, again, when they're getting older, to think about retirement. It's a pension protector, the
Yeah.
permanent. The term obviously is going to go away at some point, but if you work for the Long Island Railroad or your FDNY, NYPD, teachers, nurses, my wife's a trauma nurse, anybody who has to make a decision on a pension, if you do the math on it, sometimes those spreads could be over 1,000 a month of a gamble.
Mm-hmm.
I'm going to gamble that that you predeceased me,
Yep.
and if that doesn't happen, you just forfeited all that money
Yeah.
to live on.
Exactly.
So choose the option that it dies with you
Mm-hmm.
and have a permanent life insurance policy, because even if the scenario does happen and and you do predecease and it pops over to your spouse, that is still taxable income
Correct.
to your spouse.
Right.
So the life insurance, 9 times out of 10, I tell people, you know how much life insurance you could buy for $12,000 a year
For what you're paying into
for what you're paying, and it's tax free.
Mm-hmm. Yeah.
Sometimes it's lopsided. I've done so much planning for the Long Island Railroad employees. I've gone to their union meetings and tried to educate people on it. Listen, if the spread is $100, all right, don't do the life insurance. But I've never seen one not big.
Yep.
They're always big.
Yeah.
So
I have so many friends that are teachers, nurses, union people, and they think that they're covered through their jobs. And
exactly right.
the scenarios you just brought up. Well, what happens if,
What happens? Truth be told, my wife and I just went this past Monday because she's retiring in March.
Mhm.
And we sat down in Hauppauge this week at the retirement system, and her spread was $700 a month.
Mm-hmm.
And I said, well, she already has permanent insurance anyway. So
Right.
for us, it's a no-brainer. She's going to take it. But I'm just saying, $700 a month.
Yeah. What are we doing?
But if I die, she gambled and lost.
Right.
And then if you buy the pop-up, it's even more money.
Mhm.
That's why you have to look at what your scenario is when you think about the future, about what is your retirement going to look like. Are you a business owner? Are you creating your own retirement? Do you have a 403B or 401k? What's that going to look like?
Mm-hmm.
And that's why these products, life insurance, is an asset class.
Right.
And that's why it fits all of us at some point. In some way,
Yeah.
we all need some form of it.
Yep. So not only are you a life insurance broker, but you're also like an estate consultant, I guess we could call it, because you
Oh.
could kind of sit with people and be like, this is what you have through your job, this is what you need, and kind of help people like figure out.
I do. I mean, obviously, I'm not a lawyer, but
No.
but I have lawyers I work with, and I have
Yep,
accountants that I work
accountants.
with that help me come up with things. Because I don't say that I'm an expert in accounting or
No.
what the
Yeah,
tax laws or things like that. Or I mean, I know the life insurance products, but yeah, I mean,
You can
have
look
to
at
do
their-
a deep dive, because again, when you ask anybody, what's the most important thing in your life? My husband and my kids,
Mhm.
my wife and my kids.
Mm-hmm.
And that's what you're talking about, right? You're trying
Yeah.
to make sure that if something bad happens, that they've got what they need.
Yep.
And even if nothing bad happens, if then you and your husband have what you both need,
Yep.
of why you're killing yourself working 7 days a week, that when you, right?
Yep.
That when you go to retirement and you're 65, 70, and you say, you know what, I want to kick back, that you've done the plan. You don't have to worry about it.
Exactly. Yep. Yep. So now, just wrapping up, if someone listening doesn't have life insurance yet, what do you think the first step is that they should do?
Is find an advisor. I mean, listen, I think before we went on,
But not all advisors are the same as
not all advisors are the same. And I listen, I think the biggest compliment you can get in my business is a referral,
Mhm.
right? And I think going online and doing it through an online thing is a mistake.
Mhm.
I think if somebody is interested, you need to find an advisor and again, do a little research. I mean, research is huge, I think, right? If you were to look in New York, for example, like mutual companies, that's another thing. I've gravitated my business towards mutual companies versus stock companies.
Right.
Right. That is why I'm a big proponent saying Mass Mutual and Penn Mutual or Penn Insurance in New York, because it's a mutual company. Every time you make a premium payment, you're paying yourself. You're not out in the market. That's why back in the day when AIG got government funding in the Phoenix and those companies were, I
Right.
had so many clients say, I want to move my insurance out of there. What happens if I die? Right. So mutual versus stock company. And if you Google these things, what's the best mutual companies in New York? And you'll see Penn Mutual come up, Mass Mutual come up. And then you should do some research on that and see like who's a local broker or something that you want to say, oh, can I reach out and have a conversation with somebody? I think to do it online is a scary thing
Yeah.
because
Oh,
you
yeah.
don't know the details. You got to know the details. And again, going back to just real quick, like say with the ratings, for example, right? We're going to retest at some point somebody. you know how hard that's going to be if you bought it online or something?
Yeah.
No,
Nobody to talk to.
right, nobody to talk, no person to talk to
Yep.
and say, Joe, listen, my health got way better. I'm no longer taking insulin. I stopped smoking. I lost 30 pounds. I'm running. I want to retest because there are certain companies that will, after 12 months and 24 with smoking, will allow you to retest.
Yeah.
And that's why you need to work with an advisor that I mean, listen, how many times you text me, I get back to you within
Seconds.
seconds,
Yeah.
right? Because
Mhm.
I'm on top of everything.
Mhm.
Every Monday, my book of business, I get anniversaries that week.
Mhm.
I know when everybody's anniversary, and I'm a nerd. I go on and I look
Mhm.
because what if you changed your bank and now you're on autopilot and you forget to call the life insurance guy? I'm
That's
gonna
happens. Yep.
notice.
Mhm.
Oh, Eva, oh my goodness, did you switch? Oh my God, Joe, I forgot to call you.
Yeah.
I just saved something. Oh God forbid something happened.
Yep.
See, that falls on the advisor.
Right.
It doesn't get by me.
Yep.
That's why I think you look and you see what products are out there, and again, to work with an advisor, they know the market.
Mhm.
Like I know the market. Like if
Mhm.
somebody wanted to buy this, I could say, listen, I would consider this
Mhm.
based upon your health,
Yep.
your age.
So, how can people reach you? And I know you don't have social media, but maybe
I know I'm a fossil when it comes to that, but I mean, how could people reach me? That's a really good question.
you want to put your email out there, or
Sure. I mean, well, the best way is my cell phone, which
Okay.
is 516-603-7700 is my cell phone.
Mhm.
And my email is mcmahon.joe@pmlmail.com.
Mhm.
And yeah, I mean, I truly, anybody that's listening that would love to get educated, and even if you don't take anything, just to have the education is power.
Yep.
You get the ball rolling. I always tell people, even if you don't get it from me, get it from someone
Yep.
because it's important.
Yep. I truly knew nothing about life insurance before this, and still, when you talk about things, I'm like, okay, I got it. But I know that you got it. It's my needs are covered as I grow, as my family grows, and things change. I always come to you and say, oh, here's my new life event. What can we do?
Right,
And then
exactly
we figure
right.
out something that works, and then now I
Exactly
can
right.
just sleep at night knowing that if anything were to happen, we'd be okay.
Right. And
So,
Anthony knows, like, God forbid, and if something happened with the work I did
mhm.
for Anthony, call me and we'll get it taken care of right away. And
Yep.
again, that's why I think to do this with somebody online or over the commercial
Yeah.
you see on channel 11, I don't know.
It's like trying to schedule doctor's appointments these
Right.
days, and you're talking to somebody in another country, and you're like, "Can I just talk to the doctor that's like down the road?"
Exactly.
Yeah.
Exactly.
So,
So yeah, I mean, or if somebody wants to reach out to you to get to me,
yep.
that's great too. I would certainly welcome it.
Well, great. Thank you so much, and I hope we help some people out. And
I
that,
hope so too.
yep.
This was a great thing. Thank you,
Yeah.
Eva.
Thank you.
All right.
All right.